Hello students, next we'll study chapter 9, okay, 9 and 10. Financial statements we have both, right? Financial statement 1 and financial statement 2. Means in 9th chapter basic you will study and in 10th chapter adjustment entries you are going to study. So I just clubbed both the chapters here, okay, 9th as well as 10th chapter, okay. So what all we are going to study here, meaning of financial statements, what are the objectives, why we have to prepare financial statements. Then users of financial statements, means who all going to use our financial statements here. Then kinds of financial statements, means how many types of financial statements we are having. Then capital and revenue items. Then you are going to study trading account, meaning of gross profit or loss, and profit and loss account, net profit or loss, balance sheet, and adjustments of financial statements. All you are going to study in this chapter, okay. First we'll see what is the meaning of financial statement here. So financial statements are the systematically organized summary of all the ledger accounts, and it gives the details information about the financial position and the performance of the enterprise. Okay, means financial statements, what we will consider it as, it is systematically organized summary of all the ledger accounts. Okay, whatever ledger accounts we are going to prepare in trial balance, with the help of trial balance we are going to prepare this financial statements here. So it is a summary of all the transactions, all the ledger heads, okay, in one systematic format. That is financial statements we are having. So what it will give the information, it provides the information regarding financial position of the business, means at what financial position the business is, okay. Then objectives, why we have to prepare this financial statements here. First one, to find out the profit or loss during the year. In a particular year, whether the company have gone through the profit or loss, that we are going to find out here. Then secondly, to find out the financial position of the business at the end of the year, okay. Financial position means you all know, right? Whether the company is able to pay his debts or not, means financially how much the company is fit. That is financial position we have. Then lastly, to know the assets and liabilities as well as capital of the business. How many assets, means at what value the assets are there in the business, then what is the liabilities and what are the capitals. That all we are going to study in objectives of financial statements. Okay, these are the main objectives for preparing financial statements of the company. Then who are the users of this? Who are the users of financial statement? Current users, then managers, government, okay, prospective owners as well as banks. Means all these people is going to use the financial statements here. Means managers, why they will use, to check the salary purpose, to check all the profit purpose, okay. Then government, why the government will refer it, because government we have to pay the tax on the income what we are going to earn, okay. So depending upon that you are going to make the government is going to refer the financial statement here to check how much income tax you have to pay them. Then who is the prospective owner? Shareholders, okay, or the investors in your business. They are considered as the prospective owners of the business. They will check how much dividend they will get on their shares. Then next you have bankers. Why the bankers will use, to check your financial position, how much loan you have taken from them and how much you are eligible to pay. Still further, if you want anything you can take from them. That is from the bankers will use that information, okay. Then what are the types of financial statements? Income statement and position statement. Income statement means the statement which shows the profit and loss, and position statement which shows the financial position of the business, nothing but your balance sheet it is, okay. Then next you have capital and revenue items. Then what are the revenue items? Regular expenses or regular income are termed as revenue items here. Means regularly you are going to receive the amount or regularly you are going to spend the amount. For example, rent monthly you are going to pay that. That is revenue, okay. And salary you are going to receive or salary you are going to pay, okay. Interest you are going to receive regularly, that is regular income. Or revenue items means oftenly what you are going to receive, that is revenue items. And capital items, non-recurring expenses, means only one time you are going to receive or only one time you are going to spend that amount. That is considered as capital items here, and it will be shown in balance sheet. But the revenue items will be shown in trading profit and loss account, and all capital items will be shown in balance sheet. Okay. The next we have classification. How we are going to classify the transactions here, business transactions or items. Okay, we will divide it into three: capital items, revenue items, and deferred revenue expenditures. Okay, then under capital items again we have two, that is capital receipt and capital receipt and capital expenditure. Then revenue items you have revenue expenditure and revenue receipt and revenue expenditure. Just make the changes there. Okay, capital receipt and capital expenditure, and revenue items you have revenue receipt and revenue expenditure here. Then what are the capital receipts and revenue receipts? So capital receipts we will see, it is the receipt on account of capital items, say capital introduced in the business by the owners, sales proceeds of the fixed assets, investments or loan borrowed. All it is capital receipts, means one time receipts, right? Only one time you are going to invest the amount, or only one time you are going to sell your fixed asset. Okay, that is all considered as capital receipts, and this will be shown in the balance sheet. Okay, liability side. The next you have revenue receipts. These are the items which you can collect regularly, regular income. Okay, interest received, sale of goods received. Okay, all incomes what you are going to receive regularly, that is considered as revenue receipt here, and it will be shown in trading profit and loss account, credit side, revenue receipts. Okay, always receipts we are going to show trading profit and loss account, credit side here. Okay, then normally these are recurring in nature and capital receipts are non-recurring in nature. Now we have the differences here, difference between capital receipts and revenue receipt. Okay, so capital receipts, these receipts are not received regularly. Capital receipts we are going to receive regularly here, but revenue receipts we are going to receive regularly. Okay, and capital receipts are not meant for specific purpose, but these capital receipts are particularly meant for specific purpose. Loan if you have taken, it will be for specific purpose, you have taken a loan and for that only you are going to spend that amount. But revenue receipts are in general, for whatever you can use it. Okay, and these capital receipts we will record it in a balance sheet of the firm, but these revenue receipts we will record it in a profit and loss account. Okay, the next you have capital expenditure and revenue expenditure. Okay, capital expenditure incurred for the acquisition of fixed assets like land and building, machinery, etc. Okay, to increase the revenue of the business, means purchase of fixed asset, we will consider it as a capital expenditure, means one time you are going to spend that amount. Okay, and normally we will show it in a balance sheet asset side. And revenue expenditure means regular expenses incurred for the business purpose, and this will be shown in a profit and loss account, debit side of the account. Okay, then we have the difference between both capital and revenue expenditure here. Capital expenditure you have, it is incurred on acquisition of the asset. Capital expenditure means these expenses considered as while purchasing the asset you are going to spend that amount. Revenue expenditure, it is incurred regular business activities. Okay, for the regular business activities what you are going to spend, that is revenue expenditure. Then it adds to revenue earning capacity of the business. Whatever assets we are going to purchase, it will add our revenue earning capacity. But revenue expenditure, it maintains the revenue earning capacity of the business. And capital expenditures we will show in the balance sheet asset side, and revenue expenditures we will show profit and loss account, debit side here. Okay, the next you have deferred revenue expenditure. So what are these deferred revenue expenditure? These are heavy revenue expenditure whose benefit extends to 2 or more years. Means one expense only it is, but heavy expense which you are going to pay in more than 1 year. That is called deferred revenue expenditure here. For example, they have given preliminary expenses, heavy advertisement charges for newly introduced product, and heavy amount spent on repairs of the machines or plants here. Okay, these all lies under deferred revenue expenditure. Till now, if you have any doubt, you can get it clarified. Okay.